Welcome to Seven Bulls. We break down finance so that anyone can understand. Roll the intro.
Hello, fellow investors. Welcome to Seven Bulls, a We Grow affiliate. Today, we're diving into the Chinese e-commerce giant Alibaba. Is it a good long-term investment? Let's get into it and find out. Before we move on, it's been a minute since I've posted, and I'd like to thank all who still rock with me as I pass on this information on how to grow your wealth over time. I feel that I have laid a foundation on how to get the knowledge. Now I would like to pivot a little and start dedicating videos to going over companies themselves. If you find value, don't forget to give the video a like and share. Also, feel free to share and leave a comment. It really helps us get into the algorithm. Thank you. Now let's get to it. Now, Alibaba might sound like something out of Aladdin, but trust me, there's no magic carpet ride here. This company is a real powerhouse, and whether you're a seasoned investor or just starting out, understanding this behemoth is crucial. What exactly is Alibaba? Think of Alibaba as the Amazon of China, but on steroids. They dominate the Chinese e-commerce market with platforms like Taobao, their version of eBay, and Tmall, which is more like Amazon's marketplace. But hold on, they don't stop there. They've got their fingers in everything from cloud computing with Alibaba Cloud to digital media with Youku, their YouTube equivalent, and even logistics with Cainiao, their massive delivery network. Alibaba is basically a one-stop shop for all things digital in China. They connect millions of businesses and consumers, facilitating online shopping, payments, and even entertainment. Should you consider adding Alibaba to your portfolio? Well, first off, their financials are impressive. We're talking about a company with a market cap of over $189 billion. Their latest earnings report showed revenue of $137 billion, and they pulled in a net income of $12.2 billion. That's some serious cash flow. But it's not just about the present. Alibaba has massive growth potential. The Chinese middle class is expanding rapidly, and with it, the demand for online shopping and digital services. Alibaba is perfectly positioned to capitalize on this trend. Now, let's look at some key metrics. Their price to earnings ratio, or PE, currently sits at 16.8, which is relatively reasonable compared to some of their tech counterparts. And with a forward PE of 9, the market seems to be expecting significant earnings growth. Their debt to equity ratio is a healthy 0.22, showing they're not overly reliant on borrowed money. But hey, I'm not just going to sugarcoat it. Like any investment, Alibaba comes with its own set of risks. One word: regulation. The Chinese government has been tightening its grip on the tech sector, and Alibaba has felt the heat. This regulatory uncertainty can make some investors nervous. Another factor is competition. While Alibaba is the big player, they're not alone. Companies like JD.com and Pinduoduo are vying for market share, and that can put pressure on profits. And let's not forget the overall economic climate. A slowdown in the Chinese economy could impact consumer spending and, in turn, Alibaba's bottom line. But here's the thing. Despite these challenges, Alibaba remains a dominant force in a rapidly growing market. They've got a strong track record, a diversified business model, and a massive user base. They're constantly innovating, expanding into new areas like artificial intelligence, and even exploring the metaverse. Plus, with a stock price that has seen some fluctuations recently, there could be an opportunity for investors to buy in at a potentially attractive valuation. So, is Alibaba a good investment? Well, that's ultimately up to you to decide. Do your own research, weigh the risks and rewards, and see if it aligns with your investment goals. But one thing's for sure: Alibaba is a company that's shaping the future of e-commerce and technology, and it's definitely one to watch. Thank you for watching. If you found any value in today's video, don't forget to like, share, and subscribe to the channel for more in-depth company analyses, and hit that notification bell so you don't miss out on future content. Remember to keep up with your financial education. You're the only one in charge of your future. Be safe.
We grew